Yes, if you can definitely see, remember, all the sessions are recorded so that we can go and watch them over and over on YouTube. Remember, please make it a point that you do subscribe to the YouTube channel. You go there, you subscribe. Yeah, so you go to the YouTube channel and you subscribe and you like, you know, the videos that are posted there, you know. But otherwise, yeah, okay. Yes, welcome, 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 welcome. It's a Forex and Chill session, masterclass, you know. And remember, you feel free to ask questions, you know, if there's a place where you feel like, no, I don't understand what you are talking about, Mr. President. Feel free to ask any question because it's very important as we begin the week, you know, as we're going to be beginning a week, you must have a clear understanding how you're going to approach the market and how are you going to deal with every situation that you face, you know. It's very important if you came across a situation where you're like, I'm not sure what is going on here. And then it's very important for you to come and ask questions on a Sunday or whenever we are doing a session. Okay. Otherwise, first thing first, it's very crucial that we discuss, you know, the importance of understanding candlestick. Remember, when we're doing all our analysis, they're all done using candlesticks. In order to be able to trade the market, we need to be able to understand why is the price where it is right now, and we need to also have a little bit of understanding probabilities where the price will go next. And obviously, like we've mentioned before, the best indicator it is the price itself. You know, a lot of people are selling, are pushing, not a lot of people. You know, there are some traders that are actually trading using indicators, that are using systems, which is good because it helps them as a confirmation. But the confirmation is not the same as understanding why is the price where it is right now and understanding why the price moved to that area. Okay. So just so that everyone can be on the same page, understand that we obviously, as we are trading, we're buying low and we are selling high. That is basically what we're doing. And we know that the price, most of the time in economics, it's been said that when the price is high, you will find that a lot of people are not going to be buying that. So hence, you see a demand, it's low. When the price is high, the demand is going to be low. But when the price is very high, there's going to be a huge supply, which results to a price dropping. Okay. Otherwise, remember, if we've got a chat box, if you want to ask any question, don't hesitate to ask. And remember, otherwise, if you can see my screen, please confirm. If you can see my screen and hear my voice, please just confirm. And please confirm. Please type on the chat box. I am in. I'm in the Forex. I'm in the class. You know, just type, you know, one of those so that I will know that you can hear my voice and you can actually see my screen. You know, I'm in the class. I'm in the class. Oh, I'm in the Zoom. I'm in the Zoom. It sounds like something else, but yeah, yeah. Just confirm it. You know, because I want to know. All right, perfect, perfect. Thank you, Mubega, for confirming. Thank you, much appreciated very much. Ujali. Oh, thank you, Charlie. Otherwise, much appreciated. It's a Sunday chill. You know, very few people take their time to learn. But, you know, it's very important because once you've got the skill, you got it for life. And you can, once the skill is there, you know that you can use it and make some profits. And the profit obviously is what will definitely change your own life and what you can do for your family and also for your community. You know, quite a lot of people that want to do things for their community in this group, which is good. So these are some of the candlesticks. Obviously, the candlesticks will give you four prices: the high and the close and opening, and the lowest price, the market reach. So you get four prices, but obviously, if the price closed high, it means it was this kind of, obviously, it's a grain, meaning the price, the opening is the lowest and the close very high, and the worst is the lowest price and is the highest price the market reached. And the red, obviously, is where you see the price actually drop, because the open is right there in the top and the close is right in the bottom, because this is red showing the price actually went dropped, meaning it's closed lower. So obviously the candlesticks will give you four prizes. You get four prizes, but these are some of the candles that are important when we analyze. You see a doji, you can see a doji like this one and this one and this one. So most doji people call it an indecision candle. You're more likely to see it when the market is starting to reverse. So a body is small relative to the wicks. So a body is the red part, or the part that is green in this case. So this is the body, and the two black are the one we call it the wicks, or we call it, the shadows. Some people call it the shadows. So other parts, other kind of dodges where you see a very small body. The reason we are starting with this is because it's going to be very crucial when we're doing our analysis, in the next few minutes, because we need to do analysis because it's Sunday, okay? You can see that the market open, price went above and below, and then closed fairly close to the open. These sellers, for the moment, supply and demand are in balance. So you'll find the doji mostly when the price starts to reverse, whether in the lows or the high, when the price started to reverse. So this one can be anywhere when there's going to be a change in price, or maybe the price is in imbalance, meaning the supply and demand are in the balance, meaning the same way, the same amount of people that are buying is also the same amount of people that are selling. But what is also important is that note where is the doji, the location of the candle is very important when it comes to candlesticks. So that's what gives meaning to candlesticks. So this is a shooting star. A shooting star obviously is a bearish pattern. A long wick at the top, or maybe the long shadow, the black one is what we call the wick. And then see the red and the blue doesn't really matter that much. The long wick at the top shows that the buyers were in control, meaning the price actually went up there to the top until the price hit a certain level, then it dropped. Okay, hit a certain price and then it dropped. At this point, obviously, the sellers were in control. They pushed the price back, and the price closed the low. This candle may have a small wick on the bottom. So you see there, this is a huge wick, but then you see a small body there, shooting star. So this candle obviously more likely to see in the supply level, or in the place of resistance, where the price is going to start to resist going further up and start dropping. So you're more likely to see a shooting star in those levels, more likely to see that. Very important to note. And then this is a hammer. So a hammer, it is a bullish pattern. It's a reversal pattern. At the open, sellers were in control until the price reached a point indicated by the bottom of the week. At that point, buyers took over and pushed the price back up to the close. So you're more likely to see this in the demand zone, or in the buy zone, or in the support levels, where you're more likely to see this. So you see how we link the two, you'll see how we link. Then obviously you've got the bearish engulfing. So this is a bullish candle and the bearish candle dropping. And then obviously another one is the morning star. All these are just patterns that are important. But you can notice that this here is a hammer, bullish hammer, and this is a shooting star. Another one is this is a bullish engulfing pattern. Also, it is a bullish hammer on this side, okay? So yeah, otherwise, okay, let's just go over the chart so that we can have a bit of understanding how we're gonna apply this knowledge. It's very important to apply the knowledge that we have learned. Remember, if you can remember, on Friday we had, I think, Friday. Okay. Remember what is going on right now. Let's just go over this so that everyone can be on the same page. Remember this weekend, what is going on? We are having what we call a summit, a G7 summit. Is taking place in Japan, as you know. If you don't have an idea what G7 summit is, basically seven top countries, just I think it's explained here. So everyone can be on the same page. It's taking place, started on Friday. So just give you a brief of understanding. I think today we saw the president of Ukraine going there, so that there were updates on G7 summit. Japan is hosting. You've got the Canada, France, Germany, Italy, Japan, and the United Kingdom and the United States. And then today, it was Joe was speaking today. He was just talking how, how many people have lost their life even from Russia, because we saw the president from Ukraine flying down all the way to Japan, who was there to speak so they can get help from all these other countries to support, you know, him on the Ukraine. The reason we talk about this because the war has actually affected oil supplies, affected even the way the interest rate is moving right now. It has also affected this. Okay. Yeah. So what I wanted to take a look at is economic calendar. Economic calendar, I get it from investing.com, or you can get it even at Forex Factory. So that's economic calendar. Give you a bit of understanding economic events that are going to be happening during the week. So because they tend to bring volatility to the market, meaning attract traders to start placing trades and enter position, brings a volume. So when people see that there are some news, they're more likely to be active. Remember, this is Australia. So nothing much on Monday. So Tuesday, we're gonna have RBA meetings, industrial production from China. Expectation is that they will drop by 5.6%. This is basically, Tuesday is 16 May. Oh, okay. I think I got last week. Wow. Yeah, should be this week. What happened? What happened this week? Uh, I should have taken for the other week. 23. Because I was like, hey, well, why am I seeing results, you know, on the 22nd? Yeah, I was like, hey, but why am I seeing? Uh, okay, but even though it's like that, but I think also there's not gonna be much in terms of economic calendar. Not much is happening anyway. Why? Yeah, because Canada today for Canada. Otherwise, nothing much is happening tomorrow, Monday the 22nd. And then obviously on during Asian session, going to Monday, we're gonna have China releasing those. Nice. Euro half past 9, 10 PMIs on GDP. Those are crucial. And then have four again. Got us four PMIs on USD. Okay. And then just checking for the one Wednesday, 23rd decision, potential hike. As you can see, it's 5.25, 5.50. Potential on 4 p 4 a.m. on the Wednesday, RSP, and then CPI on GDP on Wednesday. Then the governor was Bank of England governor will speak on Wednesday, 3 o'clock, and then also on 11:30. And on Wednesday we have that. Otherwise, I don't to focus on this because I know a lot of people be focusing more on trading. Technical analysis, just having a bit more understanding on that. Okay, do that. Also, are you still? Can you guys still hear me? Because maybe it's a problem with the network. I'm not sure. But what I'm gonna do is this. So on Friday, obviously, the Fed they mentioned that because inflation is still too high, but they will not hike rates any further because a lot of banks have been affected. You know, they have been affected. They've lost a lot of clients. They've lost a lot of people. A lot of people are basically defaulting on their loans. They're defaulting of paying off their bonds, even their cars, because of the high interest rate. They've never been so much high. They're so high at this level that basically they don't understand that. So a lot of banks are basically filing for bankruptcy. It's a huge problem in the US, and it's also a huge problem even here in South Africa. A lot of people may not tell you this, but there's definitely a huge crisis. Okay. Otherwise, this is what I'm looking at when I'm looking at this week. Okay, like I've mentioned before, you'll see here this level before the market reverse what you see a doge, right? When you go to the lowest again, you're more likely to see, but in this case, there was no doji. But there's couple of hammer. So you can see there. So these are the candles. We're looking at the low, taking that high, and we're taking that low. You see the market reverse. Chances are when the market reverse from here to let's just do this, there to that level, chances what we'll do is we draw something like a Fibonacci, okay? A Fibonacci will give you a little bit of how much was the reversal. So I always like to, so this is a reversal. So chances are when it reverses, when the price reverses to a certain level, more likely you get a 50% reversal. Okay, what does this mean? It means, let's say the price of this was from here, it was 200 Rand, then it dropped to that level, this is 100 Rand. So the midly in between here, it's a 50% between the 100 and the 200. So which possible it is 150. Let me just write this down so that you won't be confused. This is an example what it means to have a Fibonacci, okay? If we call this a 200 level, okay? We call this a 200 level, and we call this a 100 level. So the price is more likely to reverse to about, oh, let's call it 100 level. So it dropped by 100, so we're calling this 100 level. So the level in between is going to be what? 150. Okay? 150. That's a level in between the two levels. Okay? I think we still have time. So we're going to do a little bit of analysis. We're going to using the knowledge from understanding the candlesticks and also from understanding level. So we call this 150 level because it's 50% to here, 50% to there. But obviously when the price drop, it normally will happen from this level to that level. So because I also like switching. If the price drop from there to there, I also like switching from using candlesticks to using a line chart, okay? Because sort of give me a clear indicator. I like using that. So what I will do is I'll take this from there because the candlestick is just the line graph definitely they show you where the actual close of the price. And then so what I would do is I'll draw Fibonacci because this is a downtrend, the market is moving down. what I will do is I'll pull the Fibonacci from the top to the bottom, okay? From the top to the bottom, okay? What I will highlight mostly, you can see this is daily. I like using daily because it will give you me a higher time frame for clear direction. Because each candle here represents a day, so you get more information on the daily. If you go to H4, obviously each candle here, each candle represents a 4 hour. If you go to H1, each candle represents an hour. 30 minutes, each candle represents 30 minutes, meaning you're gonna get more information on one candle if you go on a daily. For a direction, go on a daily. Even for daily trade, go on a daily for just to check the trend and the direction of the market. And also because the candles on the daily, they've got much more information than you get on the 1 hour. But obviously for your entries, go on H1 because even the even the stop losses, you can check them on the smaller time frame. For example, if you are selling, go on a smaller time frame, you get a much smaller stop losses. For example, if you are selling at this level. But now, if you go on a daily, your stop loss might be a bit bigger and you might even blow the account. But then for take profit, obviously use the daily because you get much bigger take profit. Otherwise, let's just do analysis. Okay. So now let's just zoom in a bit. Zoom in a bit. Let's remove that. I think the point about that is clear. So as you can see, as I was pulling my Fibonacci, let me just remove all of this. Not unnecessary confusion. You can see my Fibonacci from there. From there, this is another point, Fibonacci. This here. And I was pulling it from the top to the bottom. Why? Because it's on a downtrend. On the uptrend, I'll pull it from the top to the bottom. Okay. I hope that makes sense. So now you got a 50 and a 60. That is where you'll see a lot of reversal to the back. Okay. So between the 50 and the 60, to show you what I mean by that, see these points, 50 and the 60. So 50 and the 60. So this is a 60, this is a 50. That is where you might like to see a lot of reversals, okay? Whether it's a buy or a sell. So you can see that was right there on this point here. So I think we did analyze that on the group on one of the analysis. But now the reversal more likely to go back up to this level. 14.8. Yeah, up until 23. Okay. My expectation is this, is that I'm expecting obviously the dollar to drop up until to these levels. I'm marking the dollar index, by the way, so it may go back here to this level before that huge drop. Okay. Remember, we're looking at probabilities. Always use risk management. And obviously, we're going to see some reaction when the market reached this point of this candle. We did talk about this candle as a hammer because you saw a bullish movement in that level, so it might even have an effect. And if you go on a smaller time frame, you'll see an effect here and obviously down here. Okay. So this is what probabilities when you're talking about on a higher time frame of the dollar index. Okay. I mentioned before, we just clear this out again so that you can have a clear understanding of few things. Back. Okay, you can see this is the structure. This here is a doji. This here is a low. You can see this is a double marrow. Some people call it a tweezer. Some people call it a railroad track. It just highlights what I'm talking about. Those are brand new. So this one here. This one here. Okay. You can see touch almost that level. And then the price did it like it was just accumulating. And even the momentum here is not as strong, but it did touch in that level. Crucial. Let's just switch back to line graph. You can see this was a previous resistance. So we're gonna mark that as R. We're gonna mark that as R. Resistance is when the price failed, it's like a ceiling, where the price failed to break through that level. So it's almost like bouncing in that level. So we call that level a resistance, where the price is resisting to break through a level. So let's switch back to the line chart. So you can see even there on resistance level, there was this shooting star, which some people call it an inverted hammer. But you can see it created another pattern which is crucial, okay? You can see even this hammer here, it just did this. So the price went up and the price touches level, okay? And then my expectation obviously now that the price gonna come here and it's gonna do this, gonna touch that level. You can see even a clear, nice pattern over here. See a nice pattern that is developing over here. I'm expecting this price to touch that level and then obviously do a drop. Okay, so this is my expectation this week. What I mean, you can see this hammer here, this here. The price broke above, came back, a retest, and then a move. You can see this push is not even as solid because it is moving in a form of compression. Okay. So now, once you've done the dollar index, we can now take a look at gold. Okay. If the dollar index is indeed dropping, what we're expecting on gold, we expecting it to come to this level, test these levels, expecting to push and test these levels. Okay. Yeah. So that we expect it to touch that level. Not again. So you can see right there, some liquidity was taken out. Liquidity meaning some stop losses at that level, this level here. That level over there was taken out. Yeah. Even this level here, some of the liquidity was taken out. This level, this here, a lot of stop losses here that were taken out. So as you can see, there was an activity. I think we did some analysis here, and the price did react to that level. Okay, the price did react to that level. So expectation on gold is that obviously we're expecting gold to react to that level. Okay, you see this is a candle where the price actually made a drop, huge drop. See this huge drop after this move. A lot of people expecting it to bounce and go up, but after this, continue with the huge drop, and it closed even below this 1 and 2 support level, and it dropped. Okay. Expectation is that obviously gold is this bit of a feedback of noise. Okay, so this is what I'm expecting on gold. Expecting to push, continue pushing up. Remember probabilities. I'm not in charge what's going on in the market. You just analyze probability. Okay. Like keep mentioning this. You're gonna see these candles that we say like crucial here. You're gonna see the Doge and all of that, and you can see here this is a bullish engulfing, and this side Doji, and then the price made a move like that, dropping. You can see this compression. After compression, always expect a huge touch, a huge bullish or bearish movement towards the next demand level. So my expectation, number one, that gold would drop towards this level, and then that's where you'll see gold pushing really high from there. It's either that level or that level. The volume, the market makers see that nation, that. Okay. What else have we got? Got the Nasdaq. After those comments that we made by the one, by Joe Paul on Friday, you saw a lot of this were dropping. Obviously Nasdaq broke above this level, betting again, slowly just moving up. Looking at the Nasdaq, not much of a setup, because this is just noise, so to say, not much of a setup. But whenever you're gonna be buying, what you want to see, number one, when the market break a level, just do this. When the market breaks a level, you want it to come back and retest. Okay. The last, the last level that broke above, the last level which was crucial is this level. Okay. Expecting to come back to that level of there before going any further up. A lot of banks actually failing right now, which is a bit of a problem for a lot of banking sectors. A lot of banks are quite failing, and it's a problem in the market. They don't know what to do with it. Otherwise, looking at this, another one like we mentioned before, this was another crucial level of support. I'll mark that so that you know. Level of support, right, just like S1, okay. This level here, when the market broke below that level, what happened? This here, compression happened. And what I'm expecting on the pound, I'm expecting the pound to continue pushing up and then obviously drop. Okay. Wanna see how is the pound gonna react on this level here. Okay. See? Expecting the pound to see how is the pound gonna react when it get to that level over there. So this is the sum of expectation. Crucial candle, like I mentioned again, as another doji, this candle. So this is a drop, and then this is a base, and then a drop. Okay, expecting market to go there. Go in the smaller time frame. Very important to go and check on the smaller time frame. Okay. Yes, so this is a smaller time frame in the pound. Expecting it to do this. Come here. Okay. Go there. And then drop. So these are the level where we're waiting to see some reaction. Okay. This level here, expecting to see some reaction on that. Okay. because there's a lot of, a lot of liquidity here. So they need to touch that. And also, as the market was dropping, as you can see, this here is trapping both this movement is drop, push up, trapping people to buy, trapping people to sell, trapping people to buy, to sell, to buy, to sell. And then one move, all those who are selling here are out, and then they drop, all those that are buying gonna be out, and then move in one direction. Okay? What else should we look at with USD CAD? Because I want to avoid almost similar pair over and over. I think we've done this. A lot of people obviously would do this and this, but not necessary. All of that. What should do this? Understand that the market is basically from there. Analyze this before. What are we expecting on the swan? Expecting I'm expecting the cat to come back to this level. We've done analysis before. I'm expecting to come back to this level because obviously it's trapping both ways. So we're gonna post analysis on the group. I just wanted us to have a bit of a review, all of us as a group, a little bit of a review. Then the dollar will definitely do this. Always use risk management all the time. And yeah, trade safe, trade well. I will upload